Good morning, good morning, good morning, everybody. A couple little things I'd like to go through this morning. If we go back and we take a gander, typically I want to address one intermarket connectivity, which we always used to trade back in the day before we got busy with other things, and it was trading the bonds and the Japanese yen futures. Now the Japanese yen is WY. WY is gray, and that's this one right here. It's down 5% year to date. It from last week, it's up obviously. The interesting aspect is the connectivity is that the Japanese used to buy a lot of our bonds. So when bonds went up, the yen went up. When the bonds went down, the yen went down. Because remember, the yen in futures is termed dollar yen, not yen dollar. So it's inverted. So if you look at the Forex cash market and the yen, it's priced slightly different. It's when you look at the dollar yen combination, it's like 125.11 in the spot market. That's dollar versus yen, and the futures we trade yen versus dollar. So we are at on a spot basis, it's inverted, but we trade the futures here, and that's where we take a look at the valuation and use the commitment of traders data. Now, over the weekend, we did our first series of mentoring review class, and in that mentoring review class, I went through and we kind of went through some of the techniques that we used in this trading room in crude oil and gold with the commitment of traders data, which has been invaluable in understanding whether or not the market's kind of with confirming technical indicators and seasonality, meaning the market like gold was overbought at 1226 and crude oil at 56.5 was undervalued, and the specs going back and forth, long and short, and boy, the commitment of traders report reveals that the small specs have just getting banged around by substantial amounts of money. Well, the funny thing is in the Japanese yen, and this is what I want to address, two things. One, I do not, bonds are down here in fuchsia or purple. So let me go over here and I'm going to edit this and I'm going to show you something here. Bonds, and I'm going to go width and I'm going to go thin. Okay, let me go back to medium thick. And then the euro currency has got a very similar color. So let me get rid of the euro currency and I'll make that a very light. Yeah, that's fine. All right. Now, so you can actually kind of see, it's not one-to-one, but you can actually see the from the point of the beginning of the year. And let's get more or less the beginning of the year is right somewhere around here. For practical purposes, I can't just get it exact. Anyway, what I want you to just look at is the trend relationship. Obviously, the Japanese yen, this gray line in here, has been under the 0% change line, so have bonds. When the bonds kind of rallied first, then the Japanese yen rallied. You can see that relationship approximately. Here are the bonds, and here's the yen. Okay, the gray line. And it may help if I do this for today's presentation. The long and the short of it is, I think the yen is due for a short covering bounce, and this is one thing that I actually tweeted this out, and here now we can take a better look-see of the relationship, the intermarket relationship between the bonds and the Japanese yen. So at sometimes you get the market, it looks like the bonds move a little bit before the Japanese yen, and then the Japanese yen follows suit. But needless to say, I think that we have a potential for either a short covering rally in the Japanese yen, and or more importantly, I think a pause. Now, interestingly enough, last week we were talking about the bonds having this potential bullish convergence with the volume action. So I want to look at bonds and I want to look at Japanese yen because the FXY is the Japanese yen exchange traded fund. And I think there might be a trade here for us in the Japanese yen to the upside. Now, when I look at the Japanese yen futures right now, Unfortunately, well, it's not a big deal, but they are up 36 cents or pips, or I call them points because we never called pips. That's a Forex thing, and we call them points or ticks. There's 100 ticks to a point in the futures, and in the Japanese yen, it's 1,250,000 yen, which comes out to $12.50 a tick. Each point move in the Japanese yen futures, each point move, 100 ticks, each point move is $1,250. So a 40-point move or 40-tick move is 4/10 of a point, is $500. Okay, so I'm looking at the Japanese yen as an oversold market condition, and I want to go over and examine this because I did tweet that out over the weekend based on what we had discussed in our mentoring session. So it's kind of like I kind of shared what we were doing in the trading room with some of the folks in the mentoring, and I'm going to share what we came through in the mentoring with my folks in the trading room because it's a trading opportunity. So FXY, let's take a look at this foremost. Now, as I teach, when you look at the FXY, which is the Japanese yen exchange traded fund, and you look at seasonal analysis, the first thing you ask yourself is, well, I'm looking at a seasonal tool. How cool is that? Well, it's pretty cool, except for you're not looking at a whole lot of history here, okay? You're looking at the Japanese yen exchange traded fund that was created in 2007, and while you definitely have, you know, approximately, this was February, so you definitely have 8 years of history, you don't have historic. So next thing we want to do is go through the Japanese yen, okay? And for history, I like to go pit and electronic, because if you go pit trading, there is no pit trading pretty much, but if you go electronic trading, that didn't start until later. So you got to, for historic purposes in Genesis, use pit and electronic, and it combines the entire history or the life of that contract. If you're not sure and you doubt it, hit quarterly or Q for quarterly and go back, and you can see since 1976 now I have better seasonality historic view of supply demand averaging percentage changes over time, and I have a better way or more reliable seasonal analysis. Now, we note that there have been times in the past that the Japanese yen sells off quite dramatically throughout history. And as you notice, when it stops moving or when it departs too far from the means, it snaps back up to moving averages. Even back over here, when the Japanese yen was falling, it had a kind of a nice little snapback to the MAs. Now, not only is this coming late to the party in here and at historic lows, but it did see some dramatic sell-off on a quarterly basis. I get that, and we are significantly gapping below longer-term moving averages. So let's take a gander at why in the hell would John Person be now all of a sudden be looking at the Japanese yen for a potential reversal to the upside or a pause of this descent. So let's go back and kind of take a gander and say, well, gee whiz, seasonally speaking, from history, this bad boy actually bottoms, you know, as we get into from the first week of June, it doesn't really go anywhere. Then July, then all of a sudden, this thing really rocks going into October. It has a strong seasonal tendency to bottom out now and then move up. So that, to me, is kind of an interesting concept. Now, I'm going to go through and share with you another little interesting tidbit about the Japanese yen. And let's go over to, and for those that do not have Genesis, just share with you one interesting tidbit. So we're going to go over here to tools on our own website. We're going to Commitment of Traders Report. I'm going to go to Get Report. I'm going to scroll down, and I'm going to go to the Mercantile Exchange, short form futures and options, because they still trade options on the futures there, right? They haven't given that up, even though the floor is closing pretty soon, or I think it's the end of the month. I can't remember. It doesn't really matter. There's no one been in the currency pits for years anyway. And so here's the Japanese yen. Let's look at the hedge funds. The hedge funds have just a small, let me not be sarcastic, they have a huge net short position. In fact, they have 42% of the open interest of 314,000 contracts. So that open interest, I don't look at the actual open interest as much as I like to look at what the percent of open interest is. Look at the small speculators. Small speculators have a 4-to-1 net short position. 4-to-1. That's something extremely rare, and it's extremely lopsided. When we take a look at last week, the hedge funds actually added 19,000 as of Tuesday, 6/2, added 19,952 new net short positions. They got out of 4,000 longs. So if you think about it, if you get out of 4,000 longs in the hedge fund world, that's like selling pressure. If you switch and add new shorts, you went through 25,000 futures contracts. 25,000 futures contracts. The hedge funds are now short as of Tuesday. So the general public is short too, and they didn't budge from their shorts as of Tuesdays. They added 311 longs, so a few people got maybe burned on that one. And the balance of the contracts, the commercials started to get out of the commercials, 8,000. They started to get out of 8,000 longs and added 15,000 longs, the commercials, the guys that are in the banking business. Now, when I look at something that dramatic as we enter a seasonal tendency, and here's the key, something that I would also teach at my seminars in days of old, is that this is June. What does June mark, people? An end of a quarter. It's not the end of a month, it's the end of a quarter. No one said that a hedge fund who makes money, no one said that they can't get out of a trade, book the profit, wait a week, and get back in the trade. But needless to say, if they are very short the market and they want to get paid towards the end of the quarter, then they need to take a profit. The public generally is dumbfounded and doesn't know when to take profits. I don't want to insult that group, but traditionally they jump on a trend when it's deep into the trend. Traditionally they get that little deer-eyed thing and they don't know when to take a profit until all their profits taken, and then they get on a margin call, and then they get out of the trade, and then they blame everyone else but themselves. And that's generally the small speculator. But the commercial, they're in the business for knowing what's going on, and the hedge funds are in the business to make money for themselves and take OPM, other people's money, make money with it, and take a percentage of that profit. And you can't take a percentage of the profit unless you buy back, because open trade profits doesn't count. So I just wanted to say this market is locked and loaded for a whale of a short covering rally coming in probably the next, I would say, couple days, to be honest with you. So that's why I kind of tweeted this one out, and the Japanese yen is already, you know, off its lows, not by a lot though, all right? Not by a lot. So let me take, now that I look at that commitment of traders data, all right, and I wanted to say, here is on a weekly basis. Let me oh please, let me go through here. Let me change this setting. Let me go and go to commitment of traders. No, I'm going to go to large specs or small specs, excuse me, and I'm going to go to green. There we go. There's green, and I'm going to go to a histogram. And why didn't it change? Histogram, come on baby, histogram, there we go. All right, and I'm going to hit OK. So what I want to do is I'm going to draw a line at the level of the histogram, okay, that black line right there. And now I'm going to change this from a daily chart to a weekly chart, and now I'm going to change that to a monthly chart. All right, so here's what I wanted to share with you guys. All right, what is the small speculators have actually been, they went short the market in the whole. The market rallied. They stayed short. They stayed short. They stayed short. They're really short. They're long. They're short this market. They've traded a little bit. The hedge funds got real short down here. Then they kind of covered some of those shorts. They went back in. But you can more importantly, they almost went neutral on this trade right here, from being short to almost neutral, and then they jumped right back in it. So what you notice about this black line is that the hedge funds actually trade, don't you? What you notice about the green line is they don't really trade. They sit like, as I pointed out, deer in a headlight. So when you go through the history, you know, you say, well, they went short the market. They stayed short. Then the market had, you know, from 104 up to 127. That's I don't know. That would bankrupt any trader to stay short. But yet they stuck with it, and then they went long, and then the market went down, and then they went short, and the market went up. And you know, to be honest with you, the green histogram, they don't have very good history over time. But what I wanted to point out to you, since the history of the Japanese yen, the small speculator right now, and that's why I got that black line drawn, is the longest or the biggest net position, long or short, in the history of the market. Now, let me repeat what I just said. I'm going to get rid of the commercials. I'm going to get rid of the large specs, and we're only going to use the small specs. Now can you see what I'm sharing with you? They are the shortest after a hell of a trend run that they've ever been, either net long or net short, since this stuff started to be tracked in 1983. Do you understand that the speculators, nobody's really trading commodities, but they have amassed one of the biggest net short positions after a amazing move over a long period of time, and it's entering a seasonally strong period of time. So I'm thinking the commercials are net long and added to their longs down in here, and they're in the banking business to know things. Then I've got the hedge funds who are very quick to moving out and in of positions. So I am suggesting that you guys in this room start paying attention to a potential short covering rally over the next few weeks. All right? That would be, I think, a very poignant message. And if I may be so bold as to say, we are at or near a quarterly pivot support in a seasonally strong period of time. While I don't have you know, a huge volume push right now, may I also point out something that we talked about in our mentoring, is that after this huge down move, okay, and I may just go with a straight line just to illustrate the point. Okay, so as you can tell from this point of interest in the market here, okay, we went in the yen from 83 almost, 82.5, down to last week 79.5. That's a 300-point move. And how much selling pressure really took place did we take out from point A in my research or way of analyzing things from that point low with that volume level? The market kind of dicked around, dingled around, and went here and there, but it really sold off over the last 2 weeks. How much volume came back into the market on the short side? That, to me, is a tell that this was very, very light selling pressure. Not a lot of new volume came into the game. And so the only ones that really maybe had gotten into the game was from Tuesday. So this is Friday, Thursday, Wednesday, Tuesday. From Tuesday's close, we closed at 80.61, and then we went down to 80.61 to 79.45. Not a big deal. Not a big deal. I think the hedge funds may have pressured that market, jammed everyone who was bottom picking, hit their stops, and you're going to probably see a nasty little short covering rally. So at what point would we get a short covering rally from? Well, I can't tell you about the end of the quarter, but you know, we are still bearish on an end of quarter basis. But I can take a look at the monthly chart and say we're probably departed from the 3-period pivot point moving average a little too far, number one, and that's way the heck up here. I don't know where we're going to be in July because the month of June just started, but easily if we got back up to maybe the pivot up to the point of breakdown from let's say May 26th, we're not asking for the market to get very far. That's 82 and change to 83. This would be my guess in the futures. All right, this would be my guess, minimum objective to the futures. If I change the chart, I'm asking the market to get maybe back up to that level, which is near the weekly moving averages. And then for a monthly moving average basis, I'm asking the market to get maybe back up to test the monthly MAs. Now, what this develops into, not quite sure. But when I see a market make newer lows on less than spectacular volume, and the public, if you believe the general public is right and you trust the general public in their trading, and they've just amassed one of the largest net short positions after a huge decline in the Japanese yen in history, after a long period of time, about a 4-year breakdown, and they're now the biggest net short positions. If you don't take note of that, I have no words. I'll leave it alone. All right. So the Japanese yen could be changing guard for something because commercials are in the know. They're hedged, but boy, I'll tell you what. To me, this is exciting, and I think if we note that the seasonal analysis for October, we could start to develop. Now, FXY is not one of the most liquid, understatement there, one of the most liquid exchange traded funds when it first started. And you know, I think everyone's looking at the Japanese yen as a I don't know, a dead currency. But I can tell you, I think from looking at the technicals, the commercials, the commitment of traders, this is one market that I, at the very least, do not want to be short. And at the very least, if I could look at maybe some credit put spreads or look at some directional trades, non-directional back and forth, go from strong trend to maybe a little consolidation to possibly, here's the key, because this is a little different, end of quarter profit taking snapback. And if something happens in the Japanese yen, which, by the way, I think Brazil raised interest rates last week a little bit, but if something happens in the Japanese yen and there's a change of guards in interest rates and interest rate differentials around the globe, perhaps we may see something brewing and be paying attention into the Japanese yen, because I think that trend may have exhausted itself. So that's one of the top trades that I would be wanting and am looking at for myself, and I'd probably suggest that we look at something in that realm as you know, a potential upside trade. It's pretty exciting to me when I see a move such as that. Now, one of our students had asked me about the ES, and I mean, did anyone get the point of we were going long last week? Did anyone hear that out of my mouth, to get long and buy and get aggressively long the stock market for the last 10 days? Did anyone hear that out of my mouth? I don't want to be facetious or sarcastic or bitter or any of that nature. He heard that out of my mouth, and I know a couple people here said, when should I buy puts? It's, well, before FOMC, after FOMC. You know, I told everyone that it's like health insurance. You need it, okay? So now you have some health insurance. Where do we go? We had a projection of possibly seeing this market trade down to the 2080. Not all stocks are going down in this market. And what else did we have happen last week? The banks surged. I did not have the opportune time to be online with you guys Friday. I was looking at things on my laptop via wireless, and I did notice one of our positions in Bank America had finally moved, not just where we said it would go, but it gave a little bit more, and Bank America had a nice trade. So Bank America, we'd been in that trade since late April, I think. To be honest with you, I have to go back and look at view data at the trade, but moral of the story, I know we were in that trade from approximately 1583, and we're trading at 1720. We had two ways to trade it: short-term, near-term options with July, which we scaled out of, and longer-term options. So that's another nice little trade, and while we don't have a trade every single hour or minute in this trading room, we've had some pretty stellar trades. As far as the stock market, when the financials still look strong to me, and when crude oil seems to be kind of holding in here a little bit. I'm thinking that the equity market's not quite ready to crash and dive, I mean to biblical proportions. So I'm still in the camp that we're probably got, you know, at least this 2080 area from our analysis will probably start to hold. Here's the S&Ps. Look at where we opened the quarter. The quarter, I said. We opened the quarter at 2058 and we're trading at 2090. So I'm not all that bearish down in here for equity. So if you are in some puts and you didn't get out of some puts, may I strongly recommend that you probably do that right about like a minute ago, okay? And I think that when we take a look at a monthly chart, the fact that we can't get through even 2 months ago's close, which is 20, if you look at where I'm pointing at, it's around 20, I'll zoom this up for you guys. Here we go, 2080, it's where the market closed, it's last month's open, and we can go back through time and notice that also 2081 and a quarter was also December's high. Until we actually roll over that, I think that we probably have one more bounce coming into the market. That's my guess. I'm not convinced that the market is ready to roll this very second, okay? I think even for that market pullback in here, I think it was kind of a shallow pullback, number one, and number two, I think that we do get maybe some upside before this thing rolls and dies. So one more, I think we've got one more upside in the market. Why do I think that? Well, and to conclusion with, and I know that this week's planning and scanning in June, very light economic. We got retail sales on Thursdays. It's kind of a light economic thing. It's the end of the quarter. I think it's time to clean up the books, back and forth type of situation. I didn't see a huge decline, number one, in advanced AD lines as strongly volume on the decline. Number two, so on a weekly basis, and this is something that we've done consistently in the trading room on Monday's planning and scanning, you can see that we really didn't get as strong as a sell-off in volume, and I really didn't get as strong of a sell-off with the AD line. So I'm a little cautious. In addition, we're coming to, in the spike, 3-month period pivot point, that gold line down to monthly support. So I think the market kind of maybe gets down and dirty, maybe choppy somewhere in here, and then we look for intraday or daily buy signals. Is anyone concerned with the fact that if you're very bearish in the market, we almost formed kind of like a quasi-doji on Friday? It just didn't close on its lows. It had all the makings of crashing and burning, and we really didn't. And the financial sector kicked into high gear. So transports kind of kicked into high gear. So I can't say that I'm extreme bearish in here, but I would say I would cover some puts in here, not all of them, at least half to, you know, be honest with you, make sure your portfolio is protected, but I think that the market sees one more bounce. I'm not thoroughly convinced that the end of the world is here personally, okay? That's just my take on the market. I think Bank America is up 10 cents today. BABA needs to close, and it didn't, above 91.5. Green Mountain Coffee Roasters, as I mentioned, that stock may see some more upside over the course of the next, just for some short covering purposes. I think it got a little accelerated down in there. And other stocks in the news for this week, to be honest, I wanted to see how the market responded to follow through for Monday. That's today, okay? For weekly high closed dojis, I didn't have enough, but the ones that I did were, let's see what you can read into. FedEx, you know, it wasn't a true high closed doji because it was after a rally. EMC, which EMC in the technology space, I just can't get behind EMC. I think it's just dead money. AutoNation, we all know that we've been hearing about strong car sales. I can't buy AutoNations at 64 when it was trading at 57 a few months ago. But let me see if you know some of these names. Morgan Stanley, Raymond James, Schwab, Zions Bancorp, Wells Fargo, and then again the KRE, the regional bank, which is something we've been showing you from trend consolidation on a longer term basis and had broken out. Now I think if the KRE, which gapped higher again, or gapped, it's trading higher right now, it's got probably another big resistance will be around 44, 10, 13, something like that. And we'll try to see how it responds at that longer term resistance. So I think it may be due for a little bit of a pause on a breakout in this week time frame. So maybe we get some follow through strength. The financials are still hitting it hard. Another one that Regeneron, if I'm pronouncing that one correctly, Regeneron looked okay. So some of the biotechs are coming back a little bit to life. SanDisk, SNDK, SanDisk. It's been in a sideways pattern. It's sideways pattern since April. It got its butt kicked since December. It was a $111 stock. It's a $69 stock now. So let me repeat. It was about $110. It's now a $70 stock. Just to round down for you guys, right? So SanDisk, and then you've got this other company, WDC, Western Digital, right? They make kind of hard drives in that space. They've both about the same time peaked out, and they both have done about the same thing. So I'm not sure it's the hard drive business, but I can also mention that in technology, the semiconductors, which last week I said I am not a part of that game anymore. I think it's too rich. And the semis, we saw approximately a 5% decline from peak to valley in the SMH. So our analysis has been kind of spot on. I just think we're seeing, again, the leadership, the sector rotation change, and it's going to kind of grind. And I think one of the sectors that may come back to life, believe it or not, is going to be, I hate to say it, in the transports, but the bank sector is awful, awful strong, both the little guys and the big guys. Insurers aren't that far behind, and that would be the exchange traded fund in the KIE. So the weakest sectors on the board, again, continue. It permeates with weakness as the theme of interest rates moving up. So interest rate sensitive stocks, again, the utilities, I was dead wrong on, but we had a very small risk. If you went with AEP, and I just had trusted some volume action, high close doji, the momentum, perhaps eventually that will come back to life. But in the XLU, it is it's again seeing further weakness. We've got a longer term support in XLU trading at around 42.21. You got the last few days of the XLU of doji patterns, actual official doji patterns. So to me, it says that there might be, and let me just share with you what that kind of looks like. And once again, the Russell looks to be, again, the strongest. So yes, XLU one more time. So here's the double doji star that we see. Actually, TradeStation makes it look more prominent. But here's the funny thing. I'm very untrusting of this decline with light volume. I have TradeStation actually has this on the 4th as a doji and has, again, the 5th as a doji, by the way. So we had two doji stars, and we're support and a confluence. We had another support near this area. You got option expiration, you got weekly, you got monthly, you got quarterly stuff, and you had a light volume sell-off down here. So I'm thinking, you know what, maybe I was a little early on that one, but with the interest rate sensitive stuff, with the way this, look at this volume action is on even a weekly basis. We are making newer lows and on light volume. So this unfortunately is probably going to be one of those markets where they bang it down, get everyone disgusted and thoroughly out of the game, and then it'll just rock in one day and have a big move. So we have a moving average crossover, which a lot of times markets try to come back and test. You have a longer-term quarterly pivot support, and it's not that far from here in the XLU. So the fact that we have a volume convergence also tells me that maybe something's going on, that maybe the market over-adjusted for interest rates. Maybe they've oversold the bonds. Maybe they've oversold the Japanese yen. And maybe there's something out there that's going to change this, because, you know, while we can look at the bonds and while we can look at all these other markets, something doesn't add up with the way they're selling off these markets and the way the public is in on them, especially in the sense of the Japanese yen. So my take is today and this week is obviously, you know, we'll probably get some massive short covering in the yen, possibly looking at the utilities. My recommendation is as we get weaker, as the market starts to move lower, start looking at your shorter term time frames. I would start with on the XLU, and I would start with the yen minimum of 15 minutes. I don't want to look at a 5-minute. And then also look at your 60 minutes and start to have alerts, if you know how to do that, on Genesis or TradeStation, or if I see them, I will post those. Currently in the XLU on a 60-minute, I mean, we have another volume convergence. It's really bizarre. So I think that perhaps we get with the remember, we had Beige Book last week. We got FOMC next week, and possibly this could be the lead up of a change or a trend reversal real quickly, as people want to maybe cover shorts or adjust position ahead of Janet Yellen. So we want to look for these types of setups in the markets. They're fast, they're furious, short covering rallies, and I think we're going to get one here based on the volume in the XLU and the Japanese yen. So with that said, I hope that kind of helps you. I hope that helps you guys out. Have a great trading week, and if we see something more in the markets, obviously we'll be looking for some day trade setups in the trading room, and we'll tweet stuff out as we see fit as far as what we see in the trading room itself. So if you don't have tweets, then may I suggest you sign up for the tweets. I've really slowed down on tweeting stuff out and kept it more business-like. And if you look at the tweets, you'll notice that on our Person's Planet website, if I go back home, I actually said FXY ready for a bounce as specs are very short yen futures, and it's prone for end of quarter profit taking from hedge funds who are also short. I can't spell it out any more than that. So that I think is something that you may want to, and I just wanted to give you the exact details about. So anyway, if the stock market was going to go down, I think we would see more sectors negative than we do. Financials, the XLF is up 0.2%. OIH only up 0.6%. XOP only up 0.5%. And the KBE and the BKX also up about 0.5% today. KRE regionals also up about 0.5%. Gold GDX up just a tad. And I mean, so I don't know what to say about gold. I have no comments on gold. It should linger. I'm not as bearish in gold down in here, and I think we made comments about that in the trading room already. And from a seasonal perspective, you know, we start to enter in July, the best time of the year to buy gold. So anyway, with that said, GDX could be one generally as a since this is recorded. Let me just point out to you, GDX generally has a delayed reaction. Once gold spikes up, GDX goes, and it's generally late July, early August, GDX moves up. So, any event, that's all I have for you guys today. And once again, if I see something out there, I'll let you guys know. Thank you all very much.